Hello students, today we will solve the fifth problem of cash flow statement, 14 marks. 2011 question paper. From the following balance sheet of XYZ Company Limited and the additional information, prepare a cash flow statement for the year 2009. So we have share capital. There is an issue of share capital rupees 10,000. It will come in finance activity. Share premium. It means shares are issued at a premium of rupees 2000. It will come in FFS. So last year 70,000 share capital, current year 8,000. There is an increase in share capital of 10,000 and there is an increase in share premium of 2000. It means shares are issued at a premium. So 10,000 plus 2000, 12,000 will come in finance activity. Next we have retained earnings. Retained earnings can also be called as reserve fund. So there is an increase in retained earnings to the extent of 7,000. Last year 23,820, current year 30,820. There is an increase in retained earnings which indicates that there is a RF transfer. It will come in operating activity. 7% mortgage loan dash and 20,000, which indicates that 7% mortgage loan is raised. So it is a finance activity. Creditor operating activity, it's a current liability. There is a decrease of 900. You should minus. Provision for tax, you need to prepare an account because we have an adjustment relating to provision for tax. Outstanding salary is a current liability. There is a decrease of rupees 600. It will come in operating activity minus. Plant and machinery 62,000, 66,000. Deduct the accumulated depreciation. You get 25,000 and 39,800. So students, you should prepare plant and machinery account and you should prepare accumulated depreciation account. It means whenever accumulated depreciation is given, you should prepare the account. Next, building 95,000, 1,16,000. Then deduct accumulated depreciation 43,000, 45,000. You get net building 52,000 and 71,000, which indicates that you should prepare building account and accumulated depreciation account. Land, compared to last year, current year, there is an increase in land, which indicates that land is purchased 2,000 rupees. It will come in investing activity. Debtor is a current asset. Operating activity, there is a decrease in stock. Stock is a current asset. There is a decrease in stock. It will come in operating activity. Last year 10,220. Current year it's 9,620. There is a decrease in stock to the extent of 600. You should add. Debtor is a current asset. Operating activity. There is a decrease in debtor to the extent of 1,000, which indicates that you should add. Next, prepaid expense is a current asset. It will come in operating activity. There is an increase in prepaid expense to the extent of 80. You should minus. Then opening cash 6,120, closing cash 9,800 will come in cash flow statement. So additional information, plant cost rupees 16,000, accumulated depreciation 14,800, was sold during the year for 12,000. So sale value is 12,000, depreciation 14,800, original cost 16,000. So original cost minus depreciation, you get 1,200 as WDV, written down value. So students, 1,200 plant is sold at 12,000, higher value. So 12,000 is a sale value. 1,200 is called WDV value. So you get a profit of 10,800. How? 12,000 sale value minus WDV 1,200. So you get 10,800 as profit on sale of plant. So 10,800 will come in plant account and operating activity. 12,000 is a sale value, will come in plant account and investing activity. Building was acquired during the year at a cost of rupees 21,000. So 21,000 is called purchase of building, will come in building account and investing activity. In addition to a cash payment of rupees 1,000. So that means another 1,000 rupees separately is being paid. Then total purchase of building will be 22,000. So we have purchased for 20,000. Then another cash payment of 1,000. So total building purchased will be 22,000, will come in building account and investing activity. 7% mortgage loan was raised for future. That means in balance sheet 20,000 loan has been raised. Last year it's dash, current year it's 20,000, which indicates that loan is borrowed. It will come in finance activity. Dividend of 8,000 was paid during the year. So dividend paid will come in OA and FA. A sum of rupees 13,900 was transferred to provision for tax account in 2009. That means it is not tax paid, it's tax provided out of profit. So it's called new provision for tax to be paid in future. So it will come in provision for tax account and it will come in OA. Provision for tax account students, it's a liability. By balance brought down 1,000 opening balance. Then by PL account 13,900 new provisions created given in the last adjustment. Then take down the closing balance. You get a differencing figure of 13,500. So 13,500 is called IT paid. It will come in finance activity. Plant and machinery account. To balance brought down 62,000. You are not supposed to take 25,000 because you need to prepare accumulated depreciation account. So you should take gross figure. Okay. So to balance brought down 62,000 opening balance. Then by depreciation given in adjustment on sale of plant 14,800. Then by sale of plant 12,000. To profit 10,800. Profit comes in debit side because in PL account it will come in credit side. Then closing balance. Then you get a differencing answer 20,000, which indicates it's a purchase of plant and machinery. Accumulated depreciation on plant it is. Okay, it's a liability because it is deducted in asset side. Deducted in asset side means it's a liability. By balance brought down 37,000. Then we have a plant and machinery depreciation given in adjustment number 1. So 14,800. Then closing balance 26,200. So you get a differencing answer of 4,000 will come in operating activity. Building is an asset. So to balance brought down opening balance 95,000. Then in adjustment number 2 they are given two purchases. One purchase 21,000 and another payment of 1,000. So total you get 22,000. Then take the closing balance. You get a further depreciation on building 11,000. Sorry, 1,000. This is accumulated depreciation on land. First, it's a liability. It's deducted in asset side. Deducted in asset side is nothing but liability. So by balance brought down 43,000. Then to building depreciation, which we just now found in the previous slide 1,000. To balance carried on 45,000. Then you get PL account 3000. It's called new depreciation for the current year. You should take it in operating activity. Building account, so this is calculation of cash flow from operating activity. So net profit not given in the question, dash. Add retained earning transfer 7000, decrease in stock 600, decrease in debtor 1000, dividends paid 8000. And because it's given in adjustment, so you pay dividend out of profit. It's a non-operating expense, so add here and deduct in finance activity. Add depreciation on plant and machinery, which we found the answer in accumulated for depreciation on plant account. Then accumulated depreciation on land and building 3000. Then add provision for tax, you get net answer 37,500. Less decrease in creditor 900, less decrease in outstanding expenses 600, less increase in prepaid expense 80, less profit on sale of plant and machinery 10,800. So you get plus 25,120, which indicates there is a cash inflow from operating activity. So calculation of cash flow from investing activity. It's simple, sale minus purchase. So we have a sale of plant and machinery 12,000 given in adjustment number 1. Less purchase of building, we have 2 purchase 21,000 and 1,000. Less purchase of plant and machinery, which we found in plant and machinery account. Then less purchase of land given in the balance sheet. Land last year 10,000, current year 12,000, which indicates that 2,000 is purchase. So you get minus 32,000, which indicates cash outflow. Next, calculation of cash flow from finance activity. Issue of shares 12,000, 10,000 capital, 2,000 premium. Then 7% mortgage loan is borrowed. So total receipts 32,000. Less payment dividend, less payment IT. So you get cash flow from finance activity 10,500. Cash flow statement as on 31/3/16. Cash flow from OA 25,120. Cash flow from investing activity, it's minus 32,000. Then cash flow from finance activity plus 10,500. So you get net cash flow plus 36,20, that is 3,620. Add opening cash, you get the resulting answer given in the question 9,800 as closing balance.